Problem 23A, Part 1, Journal Entries. We're going to discuss the problem 23A that's on page 91 and 92. On April 1st, 2012, Kathleen Alvarez established an interior decorating business in Trex Designs. During the month, Kathleen completed the following transactions related to the business. Let's look at how we journalize transactions. April 1st, Kathleen transferred cash from her personal bank account to an account to be used for the business. So in the journal entry, we're going to debit April 1st. We're going to put the date of April 1st, debit cash for $17,000, and credit the Kathleen Alvarez capital for $17,000. We debit cash to increase it. We credit capital to increase capital. Also keep in mind that the debit line is what event happened or what did the company receive. The credit line is the how and the why. So what did the company receive? Cash of $17,000. Why? Because Kathleen Alvarez invested $17,000, which is the capital account. On April 2nd, paid rent for the period of April 2nd to the end of the month, $3,400. Date, April 2nd. We debit rent expense for $3,400. We credit cash for $3,400. The event that took place is their rent expense was paid. How was it paid? It was paid for with cash. We debit all expenses to increase them, and we credit cash to decrease cash. On April 6th, we purchased office equipment on account, $10,000. We put the date of April 6th. We debit the equipment line for $10,000, and we credit accounts payable for $10,000. Equipment is an asset, so we debit to increase. Accounts payable is a liability, so we credit to increase accounts payable. On April 8th, we purchased a used truck for $21,000, paying $2,000 in cash and giving a note for the remaining balance. So on April 8th, we debit truck for $21,000. We credit cash for $2,000, notes payable for $19,000. Truck is an asset. We debit it to increase it. Cash is an asset. We credit to decrease. Notes payable is a liability, and we credit to increase. On April 10th, we purchased supplies for cash, $1,800. The date, April 10th. Supplies is debited for $1,800. Cash is credited for $1,800. Do not confuse this supply account with supplies expense. Supplies is an asset account, and it is debited to increase it. Supplies expense is an expense account. It is also debited to increase it, but do not get the two confused. April 12th, received cash for job completed, $13,000. We put the date of April 12th. We debit cash for $13,000, and we credit fees earned, which is considered to be the revenue account, for $13,000. Cash is increased with a debit. Fees earned, which is revenue, is increased with a credit. On April 15th, we paid annual premiums on property and casualty insurance, $1,800. On April 15th, we debit the prepaid insurance account for $1,800. Prepaid insurance is an asset. We debit to increase, and we credit the cash account for $1,800 to pay for it. On April 23rd, we recorded jobs completed on account and sent invoices to the customers. Basically, we did some work and we're going to bill the customers now. This is also called accrued revenues. We'll learn more about that in Chapter 3. We put the date, April 23rd. We debit accounts receivable for $9,000. We credit the fees earned, which is the revenue account, for $9,000. Accounts receivable is an asset. Debit to increase. Fees earned is a revenue. We credit to increase. On April 24th, received an invoice for truck expenses to be paid in April, $1,000. Date, April 24th. We debit truck expense for $1,000. We credit accounts payable for $1,000. All expenses are increased with a debit, and accounts payable is increased with a credit. April 29th, paid utilities expenses, $1,500. Put the date of April 29th. We debit utilities expense for $1,500, and we credit cash for $1,500. Utilities is an expense account. All expenses are increased with a debit. Cash is an asset, and it is decreased with a credit. On April 29th, we paid miscellaneous expenses, $750. April 29th, we debit the miscellaneous expense account for $750. We credit cash for $750. On April 30th, we received cash from customers on account, $7,800. The customers that we billed earlier are now sending us money to pay what they owe us. So we put the date of April 30th. We debit cash, $7,800. We credit accounts receivable, $7,800. Cash is an asset, debit to increase. Accounts receivable is an asset, and we credit to decrease this account. On April 30th, we paid wages of employees $4,000. April 30th, we debit wages expense for $4,000. We credit cash for $4,000. On April 30th, we paid the creditor a portion of the amount owed for equipment purchased on April 6th, $2,500. So on April 30th, we are going to debit accounts payable for $2,500 and credit cash for $2,500. Accounts payable is a liability, and when we debit a liability, we decrease this account. So when we want to pay a creditor money we owe them, we debit accounts payable and credit cash, or how we paid for it. In the last transaction, Kathleen Alvarez withdrew cash for personal use $2,000 on April 30th. We put the date, April 30th. We debit Catherine Alvarez drawing for $2,000 and we credit cash for $2,000. The drawing account is debited to increase it. The cash account is credited to decrease it. This concludes the journal entries for problem 23A. We'll conclude in another video for the ledger and the trial balance.